When you decide to invest in a real estate syndication deal, it's crucial to choose the right general partner, also known as the GP, to work with. Once you've signed the PPM, the private placement memorandum, and sent in your funds, you're essentially handing over pretty much all your control of the asset, and you're becoming a passive investor at that point in its true sense. This means you must be able to trust the sponsor team completely to manage the day-to-day operations and to execute the business plan and protect and grow your investment. That's why it's essential to feel confident in both the deal and the sponsor team from the beginning. Before investing, do your due diligence, address any concerns you may have, and ask plenty of questions. I get a lot of questions from new investors and more seasoned investors alike about how to actually go about doing this due diligence and making sure that the sponsor is somebody that you feel comfortable investing your money with. That's what we're going to talk about today. For those of you who do not know me, I'm Alex Kingman, the owner of KGI Capital, and we invest in distressed and heavy value-add multifamily properties in the Midwest and the Southeast. We work with passive investors like yourself in order to offer another alternative asset to your portfolio and to be able to help grow your wealth in this area. So without further ado, let's get into what to look for when choosing a GP to work with, what questions to ask, what boxes to check, everything that you're going to need to know to make a well-informed and confident decision for your next investment. This is going to be a lot of information in this video, so we're also including a checklist of the top questions to ask your sponsor before investing in a real estate deal with them. You can check that out below in the description, and all of those questions are going to cover everything that we go over in this video and be a summary of what we talk about here. That way you make sure you cover all your bases when you speak with your next sponsor that has a deal that you're thinking about investing in. All right, let's get into it. So first things first, first impressions are important. So pay attention to how the sponsor responds to your initial contact with them. A good sponsor will take the time to understand your goals, your risk tolerance, and your suitability, especially for investing in private placements. If they skip this step, it could be a big red flag. It may mean that they are inexperienced, or they may just not be very good at what they do. So it's important to check into that. Additionally, when doing your initial research, you're going to want to look for firms that are professional with a consistent message online and a strong online presence and brand. You want to invest with firms that have skin in the game, and a brand is one of the most valuable things that a business has because it takes years to earn this trust and to build up. Especially in this business, it relies heavily on word of mouth and referrals. So this is extremely meaningful to them. Therefore, if you're considering investing with a sponsor and they don't have a brand or any type of reputation, that can be a risk that you want to consider before investing with them. The next thing to look for would be confidence and humility. During your conversations with the sponsor, look for a balance of these two. Avoid sponsors who seem overly excited or hype up the investment without acknowledging the risks that are involved, because there are a lot of risks. A healthy dose of caution is essential in real estate investing. It's easy to get excited about a new investment opportunity that comes, but if they can't articulate the risks that are involved with that property, that's a huge red flag, and don't take that ride with them no matter how great it might sound. So to get this information for your due diligence on the sponsor, here are a few questions you can ask. Number one, where do they invest and why? Why do they invest there? Number two, do their markets make sense and are they in line with your beliefs? Number three, do they know why they are investing where they are? Number four, have they conducted research into those markets or are they just winging it? Number five, what type of research are they doing for these markets? And are their data points valid sources? Number six, what is their typical acquisition profile? What's their buy box? Ideally, you invest in an offering that aligns with that sponsor's core experience. Next, you want to make sure that you ask the sponsor about their investment strategy and why they invest in certain markets. You want to make sure that their investment choices align with your beliefs and goals, and you want to ensure that they conduct thorough research into their target markets and have experience in the type of property that they are offering to you as an investment. I would also highly suggest, if at all possible, meeting up with your sponsor in person, whether that's at their office or somewhere else for coffee. Regardless, the point is that you meet with them in person and get a feel for who they really are outside of just online. Meeting the sponsor in person can provide valuable insight into their operation and also into their values. There's really no substitute for personal connection, so if you have the opportunity, consider visiting them and get to know them on a slightly deeper level. Next, you're going to want to dig into the sponsor team. Examine how the company is structured and whether it operates as a cohesive unit. It's important to assess if the team functions well and if everyone has a stake in the overall success of the venture. So it's important to know how this team is structured, who they're working with, how long they've been working with them, which I'll get into a little bit later. All sponsor teams should have specific roles and responsibilities for each member of the team. You want to ensure that various team members have clearly defined roles and responsibilities. You don't want everyone just doing everything because then things start to fall through the cracks. While it's common for team members to wear multiple hats, there should be order in what they do and who does what. So you can ask about each member of the team and what their role is. Some examples of roles could be acquisitions, due diligence, legal matters, accounting, investor relations, etc. And you want to confirm that their plan is well designed. Ideally, everyone has a specialty that each of them are rock stars at that makes up a fantastic team. To give you an example, at our company, my partner Brody is the asset manager and the construction manager, which is perfect for him because he's been in the construction industry for over 7 years. He has his own general contracting company and he has extensive experience in renovating distressed properties, which is why we focus on renovating distressed properties. My main focus is to grow our investor base and our deal flow. I have a long history of sales and marketing in my past, and I've always been the top salesperson in all my previous jobs before I went full-time into real estate investing. So make sure that any groups that you're working with are dividing up the roles in a way that makes sense. And beware of groups that lack defined roles because most likely they are inexperienced, and that should be a red flag and something for you to consider as a risk before putting any money out there. Another consideration is how long the team has been together. While a newly formed partnership doesn't necessarily indicate trouble, it does pose an additional layer of risk. And this is because they haven't been together for very long, and maybe this is their first deal that they're doing together. So nobody really knows if it's going to work out, and a lot of partnerships do end up having problems with the GPs involved. So you want to make sure that you don't have to be betting on them having a good partnership. Ideally, they've already worked together on at least one deal, and that mitigates a lot of that risk. A good question that you can ask a sponsor would be, how long has your group been together? If there are any other JV partners on the GP side, how long they've worked together or at least known each other. And it's important to also ask if there's a contingency plan in place in case of a partner breakup. Knowing who would oversee the assets and what would happen to your investments in such scenarios is definitely important and something you want to take into consideration. Next up, and one of the most important parts of due diligence, is assessing the moral character and principle of the sponsor team. Now, I know this can be really difficult because if you ask a sponsor, are you moral and are you an upstanding citizen and are you a good person? Of course they're going to say yes. This is one of the biggest issues that I see in the space. There are a lot of sponsors out there who may mean well, but they don't do what they say they're going to do every single time. And that's hands down one of the most important things you need to be doing. I've seen it with small syndicators, I've seen it with large syndicators. A lot of times you don't really know somebody's true character until they are put into a challenging situation. But it's still worth the effort to do what you can to vet this out. So what you can do is you can ask them about a past deal that didn't go as planned and observe how they answer the question and how they handled that situation. Pay extra attention to whether they demonstrate transparency and accountability. You need someone who's going to take full responsibility for what's going on, good or bad. Also, keep in mind that if they have never had a bad situation happen to them or a bad deal happen to them, then they are most likely not super experienced yet. Because if you've been in this space for any amount of time, you're going to have bad things happen sometimes. Instead of looking for them to just have a perfect track record with no bad deals, what you're looking for is how they handle difficult situations. Because again, a person's real character comes through when the going gets tough. So if they just brush this topic off or don't answer this directly, or if they are giving a lot of excuses instead of just taking that responsibility, then that's a big red flag. Another aspect that you might want to look into when it comes to character is you can ask about their criminal history. Sponsors are actually required to disclose felony convictions and misdemeanor convictions involving financial crimes, fraud, and securities violations. However, just because they are required to do it doesn't mean that they will. If you want to get extra fancy with it, you could order a background check on the sponsor from a private investigating firm or an online background check, but it can get costly and it's not super common, but it's definitely an option. You can also just do an online search of the company and see what comes up, but just take it with a grain of salt because sometimes those comments are not accurate. Moving on, when you're looking at a sponsor team, ideally there's more than one person who can run the company and take over different roles within the company. I say this because it mitigates the key person risk. For example, if one person was running a syndication company and for whatever reason they got really sick or weren't able to run the company anymore, could anyone replace them? What would happen to your investments? If one member is unable to fulfill their role, others should be capable of stepping in to keep the business plan on track. The success of the venture shouldn't hinge on just one individual. So you can ask your sponsor about what they have in place to mitigate the key person risk issue if they are just one person or just a few. Now, it wouldn't make sense to discuss a sponsor team without also discussing additional consultants that they work with. Check if the team has relationships with outside consultants such as law firms, accounting firms, and property management firms. Those are the three most common. These resources are vital for effective decision making and operational efficiency. So beware of syndicators who don't have these essential connections when you are looking at a deal to invest with them. Now, sometimes operators actually bring these people in-house. So they don't necessarily have to be outside consultants, but they don't also necessarily have to be in-house either. They just need to have them. Next up, let's talk about investor relations, which I would say is also an extremely important part of the due diligence process. Investor relations is what connects the investor to the company and the deal. If a sponsor is not strong in this area, that's a red flag. If the team can't communicate with you effectively, consistently, and openly, then that is going to create tons of headache for you the entire investment period. I actually personally know quite a few investors whom invested with certain sponsor companies that did not have good investor relations, and even though they made really good financial returns, they told me that they will never invest with those companies again. You want to know what's going on with your money. You want to know what's going on with the deal. You want to know that you can ask questions and get them answered, and you want to know who to talk to get those questions answered. All of these are really important, and being able to speak with somebody and get a timely response back is huge, and it's something that so many sponsors don't do, and it seems so simple. So it's extremely important that you find a team that's really good with their investor relations. If your questions go unanswered or you're ignored, that's a huge red flag. And remember, this sponsor team will be at their best before you invest. After you invest, their performance is not likely to get better. So if you don't like what you see before investing, then that's a huge red flag. A good sponsor is going to highly value a long-term relationship with you, and they are going to want to always be in good communication with their investors. Once you get this far into the due diligence of the sponsor, it's time to start getting some references. Look for references from current and former investors that you can speak with directly. As a reminder, the references provided will most likely be selected by the sponsor, so you are probably going to hear the best case scenarios. However, it can still be very insightful into the sponsor. Here are some of the questions that you should be asking. How is the sponsor's reporting? How have investments performed against their projections? How well does the sponsor communicate? How do you get your K1? And Do they report this document in a timely manner? Has the sponsor always done what they said they were going to do? Have they failed to deliver any of those promises? How has your sponsor handled unforeseen problems? And are you happy with the way the sponsor handled those problems? How is the communication with the sponsor? Do they deliver just good news, or do they also share the bad news in a timely manner? Now that we've assessed a sponsor, their team, their partnerships, and their character, we can go into their experience. Now, experience is actually very important. It's a key factor when evaluating syndication sponsors. New sponsors who lack a brand or a track record adds additional risk to your investment, especially with the way that the economy has continued to rise. Any sponsors who are brand new to this space can look like a genius, when in reality, they've just been riding the market. And that's what saved their investments from the mistakes that they made. So remember that it's during challenging times that a sponsor's expertise truly shines through, and that's where it's the most important. Therefore, you want to check a sponsor's qualifications and experience. So let's go through a few questions that you can ask a sponsor to learn these things. First off, time. How long have the principals been investing in real estate, and more specifically in the type of real estate being acquired for this syndication? How long have the management team members been managing similar properties? Number 2, units. How many properties has the team acquired? How many units do they own? How many units do they have under management? Number 3, market. How long has the sponsor been in that particular geographical market that you are looking at? How many units have they owned and managed in that market? How intimately well do they know this market? Number 4 is economic cycle experience. Has the sponsor been through previous adverse market cycles? How did it work out for them? How did they handle the situation? Understanding a sponsor's knowledge and experience in this space is crucial, especially because it affects how they underwrite deals. They may have an overly optimistic view of what the market is going to do because of their short amount of experience in the space. And they just don't know what they don't know because they haven't been doing it for very long. Next up, number 5, syndication experience. How long have they been doing syndications? How many have they done? How much have they raised? How have the previous deals performed? Did their actual numbers meet their projected numbers on the deals that they've done? And if they were underperforming, what did they learn from that? And what did they change in response? Next, you can ask them about their assets under management. It's also commonly called AUM, and it is the amount of assets in dollar amount that the sponsor manages. This just helps give you another idea of their experience and how long they've been in the space, how much volume they're doing, and how big or small they are. Next up, you should ask about full cycles. How many of their investments have gone full cycle? What was their performance in relation to their original projections? Now, some sponsors will not necessarily be newbies, but they will not have gone full cycle on investments. And there's not necessarily anything wrong with that. They can still be really good sponsors, but you want to make sure that you know where your comfort level is with that. Additionally, you want to ask about their focus. Does the team specialize in any one specific strategy, location, product type, etc.? Or are they more of a mixed bag? Maybe they invest all over the country in different asset classes with different strategies in each location. It's okay to not necessarily specialize in one thing, but you have to take into consideration that too much variety can lead to distraction and a master of none. At KGI Capital, we focus just on distressed assets, properties that are underperforming that we can improve upon and exit. And that has always been our focus, and that has worked really well for us. So we wouldn't go out tomorrow and go get a property that is not in line with our strategy. Next up, and this is an important one, capital calls. A capital call is when a syndicator asks their investors for more money after they have already made that initial investment with the syndicator. You should ask them if they've ever had to make a capital call and why they made this call. I can't say investors will ever be happy necessarily about a capital call, but sometimes there are good reasons for these calls. And why these calls are made is extremely important to understand before investing with somebody who has had this happen before. There are a lot of times where capital calls happen because of an inexperienced sponsor team. And you need to make sure that you understand the circumstances of the capital call, and you can then determine if this was necessary or due to poor planning and inexperience. So we've gone through digging into the sponsors and the team and their character. We've gone through digging into their track record, their past, and how they do their deals. There are a few more things that are important to ask a sponsor. One would be about some additional relationships that they have. In real estate, relationships are everything in securing deals. So a syndication sponsor's ability to source acquisitions relies heavily on their network and reputation in the market. So you can ask potential sponsors how they source their acquisitions and whether they have relationships with brokers or owners or lenders. Typically, sponsors with strong networks and a history of successful transactions are going to be a good choice. Last but not least, it's extremely important to assess a sponsor's capacity to execute deals. Does the sponsor have the capacity to raise capital, fund deposits, and navigate potential challenges? Consider factors such as the sponsor's track record of raising capital. Consider the source of the deposits, the contingency plans for incomplete fundraising, and potential risks associated with deal cancellation, and what that means for your investment as well. Overall, it's crucial to choose the right partner to invest your capital with. Once you've signed that PPM and sent in your funds, you are handing over the control to them to manage those funds and that investment project. You want to feel extremely confident in this sponsor team and this company to be able to grow your wealth the way that they are projecting. And if you can't feel confident in these people to be good stewards of your investment capital and to do what they say they're going to do, then you should definitely look elsewhere. I've seen investors get into deals with sponsors where they didn't do the vetting up front just because maybe they were new and they didn't know what they didn't know, and so they got into some trouble down the road with it. So I just want to make sure that that isn't you. If you want to use this video as a guide to help you ask your sponsors questions before your next investment, then check out the checklist below of questions to ask your sponsors so that you can just have that in front of you and ask away. Also, I've included a link below so that you can schedule a call to speak with us and we can discuss your financial goals for the year and see if we're a good fit. Have a great day, and I'll see you in the next video.